Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly flesh and blood market update. Let's go. Another interesting week. So this is 3 weeks in a row of just stuff happening. It's very exciting to be watching the fab markets right now, at least the sealed product. A lot of activity up and down, basically 3 weeks straight. We did have I guess 3 weeks ago there was a pretty heavily down, but it was, somewhat split. But still, it's been split mostly. I would say it's a very interesting time to be watching and collecting, buying, selling sealed fab product, as well as singles. We'll talk a little bit about the TCG player sale that happened on Friday and my thoughts on the impact on the market. I do think that's shaping some of this volatility we've seen in the past few days, but not the past few weeks. And we'll dig into a little bit of info on the economy. Nothing too crazy. We do have some more data coming out a little bit after I'm recording this. Unfortunately, I have to record it a bit early because I am heading to the mountains to go backpacking. So this is about the normal distance in the future or past, however you're looking at it, for my recording, but a little bit earlier than normal. Not too much, though. So let's dig into some boxes. All right, so... nothing really interesting in unlimited cases. They were stable this week. Past 3 weeks has been similar. We've had one down and one up, WTR up and LE down. It's really nothing crazy, but as you can see, this unlimited sealed stuff really is not moving. It's flat. It's steady state, and that's fine by me, right? No movement's good movement in the case of something like that, especially with the ones that have elevated, such as WTR and ARC, which is pretty nice to have them stay that high for so long. I do think we will eventually see a next leg up on these, but this is just not that time. All right, moving on to first edition boxes. Oh, I'm sorry, we missed the boxes up there. Same thing, though. Same story for boxes and cases. Unlimited is boring. We said it a couple weeks ago. It's still true. Moving on to first edition, because that's where it actually gets interesting. All right, so start with ARC is up. This one has been all over the place. We watched this steady decline for the past few months. And got down to this 1,000 point from the 1,400 point, which was a pretty good sticking point for a while. We did see some dips, right? But then it kept going back to that 1,400. We're now steady in the 1,000 area, 1,100. It has popped up 8.19% to 1,099 from 1,009. So... this is where it was before. We could probably take a look at this chart. It is like a V-shaped recovery. That said, this is lower, so it's a step down from the 1,400 area that we've seen for a long time. So ARC is on the decline for first edition boxes. I will say that I suspect this is probably a result of these boxes selling. I did want to look at ARC, so we'll look at the individual page and take a look at what they have as far as sales data. I think it's really all on one box, but we'll look at it. Moving on to Mon, first edition box down to $67 from $72. That's a decline of 7.46%. This is nothing too crazy at this point. We'll see if it recovers. I do feel that there's not that much demand for Mon First Ed, and it has a lot of product, and people are probably getting tired of holding it and ready to sell it. I think with the sale, what happens is people put it on there, and then other people undercut it, and it got really low and didn't sell, and therefore we're stuck at these lower levels. I think that's the story from most of the stuff that's in decline right now, is that people try to force a sale during the TCG player sale. It was a 10% back for anything. And by trying to force it, everyone competed for lower prices, couldn't get rid of it. Sealed product just doesn't really sell in fab. That's just a reality. I am curious if anyone is out there knows of a solid EV tracker, something that is trustworthy and you can look at the data, even if it's just basic stuff. I'd love to see it, because honestly, that would make some decisions for shops, myself, and others, whether to open some of the older stuff and just sell the singles, since singles do sell. As I saw with my TCG player sales, I sold one case of sealed product. That's it. I had boxes, I had cases, I had all sorts of stuff up because I have a bunch of it. But I sold a ton, a third of my sales, and I sell Magic, so that's a big number for fab. A third of my sales was singles, like cold foils, older stuff, just rainbow foils from the first few sets. Like it just sells way better in singles form. And I think the collectors that are left are basically focused there. I think that's where it is, right? And I know some of you in the comments have said that when I've said in the past the collectors are kind of gone. I think the collectors that are gone are the sealed product collectors. I'm starting to believe, right? I'm starting to hear the comments that have come back and the things that have been said. I'm starting to believe that, yeah, there are still collectors. They just are focused in singles, which, has been confirmed in some cases by various videos. I know Saint did one when he was at like Pro Tour or something, I think it was, where he was talking about the kind of deals that were going on, and it was all around like slabbed fab, cold foils, and things like that. So the Marvels, right? So I think that's where the collector focus is right now. I don't think sealed product is this place. And if there's a good EV tracker out there, it may convince me to crack some singles and see if I can get lucky. It's tough. Fab is very tough to hit the numbers. That's why I wanted to see a solid EV tracker and have a sense of how real it is. But anyways, let me know in the comments if you know of one. Anyways, moving on to Uprising. Now we're in 2.0 products, which is interesting and fun. I'm glad that these have seen a lot of activity up and down. It gives us something to kind of hope for and look at as far as the new model and what's going on. And I'm excited to see what happens with Mistveil, because I think they've cut this print run or matched the waves, whatever they're doing. The mechanics seem to be the best that we've seen so far. So anyways, Uprising down 4.11% to 73 from 76. Lowest we've seen maybe ever, or in a long while at least. No, definitely not forever. $69 way back in February. So yeah, not forever for sure, but definitely low for the recent time since it popped back up post release kind of lull, and then we had the check mark, and now we're starting to see some settling. So that's okay. We do expect that as the sets get older. If they're still on the shelf for too long, you do see this kind of like push it off the shelf. We need room for Mistveil. Dynasty down $8 to 71 from 79. That's 11.27%. Nothing too crazy here. Again, same sort of thing. It's the lowest we've seen for a while. Again, I think this is product fatigue. It's been on the shelf for too long, and there was a sale. People were trying to dump and push it through the sale, and no one was buying sealed product as far as I saw. Outsiders down 29.23% to 65 from 84. This is somewhat remarkable because we had 2 weeks of climbs on Outsiders, and now we're down to below the pre-climb price. So let's take a look at this Outsiders. So it was Outsiders and ARC stuff, I think, is what we'll look at. But basically, the way this chart's going to look is it popped up, it was slow, faster, and then dropped down. I did that backwards, pop up. I did time backwards. Of course, I did time backwards because I live in reverse in time. I'm like Merlin. I go through time backwards, and I'm getting younger every day. If you don't know that reference, that's fine. There's a very weird deep cut there from stuff that you guys probably don't know. But anyways, basically seeing this climb and drop is not crazy. I think it's an overstated drop. I think it will come back up. I don't think we'll see it stay down there. It's that rubber band effect that Rudy talks about. We'll see that with a couple of products. I did note on some of the charts that we have a couple of these major drop back things, and they're just too far. Now, there are some things to talk about in the economy that may be a question mark on some of this. Definitely worth keeping in mind with all of this. So take everything I'm saying about the data based on face value and take it with a grain of salt. That is the macro, which we'll talk about in a second. DTD, Distilled Dawn, up 6.41% to 78 from 73. We're seeing that nice climb. I think we're still in the upswing of the check mark for them. Eventually, we will see it settle out, Dynasty Uprising style, and come back down, I suspect. But at this time, it's at a nice equilibrium that's pushing the prices kind of upwards. It's not beating its 80. This is why I think it's still on a downtrend overall. But it is on that check mark kind of rise and hold situation. So we saw it drop too far, and then it picked back up. Basically, people actually want Dust Dawn still because it's still a more relevant recent set, right? Makes sense with a player market. First edition cases, ARC. This was an interesting one, up 33.91% because there was a sale. It was down to the $52.99, $5,300 basically. That was real box wasn't selling. It looks like it sold, and we're now up to 8,000. Reality is, I think Card Shop Live still has some available, so if that's the case, this price will not hold, and it will settle back around here. I think the Card Shop Live is like 5K or maybe 6K, something like that. It's in the range, basically. And so I think with the added risk of TCG Player versus something like Card Shop Live, there's a bit of a premium on the price there, but I'm not 100% sure on that. Let's see where it lands next week, week after. Uprising up 11.07% to 280 from 249. Basically just a revision to not even the mean where it was before the high. So this might actually be part of a step up. We'll see if that holds. This is the cases. We were at 280 a couple months ago. We dropped down for a period, about a month and some change, and now we're back at 280. So it's really nothing crazy here. This is basically a long flat line with a little variance and a little wobble in the market, but nothing too nutty. Nothing really stands out there. Dust Till Dawn up 6.65% to 316 from 295. Yeah, this is pretty good. I like that. I think we're still in that uptrend like we were talking about. It's on the case level, right? So we get the down, the dip, and the back up. And I think what's happening is we're seeing the check mark, but again, macroeconomic factors need to be taken into consideration, and looking at where things are overall as the set ages, right? It becomes less and less desirable unless key cards are once again needed. And I don't know how many of those there are in Dust Till Dawn. Leave a comment if you do, if you think it's a hot set with like really good Majestics or something in it. Fine, it makes sense if that's the case. So all right, so real quick macro, then I want to jump into the charts and talk about that a little bit. Actually, I want to look at some sales for the thing. Macro stuff. Retail and discretionary spending is down. We're starting to see a revision of pricing. So you know how we've talked about greedflation, how companies basically accelerated price growth over the cost growth, basically getting in record profits over the year. Look it up. It's very easy to find. The data is very obvious. The inflation that everyone talks about was not inflation. Inflation is caused by costs going up. This was caused by profit margins going up, and you can find the data on it. It's very much everywhere. So when fake inflation, greedflation happens, it is less sticky than normal inflation. So suddenly, over the past week, we have deflation. Why? Because no one's buying at these extra prices. Everyone's downgrading to cheaper products, cheaper things, looking for sales, looking for deals, and all the big retailers that rely on consumer spending at a regular pace. You know, think of your staples like food, toilet paper, you know, that sort of stuff, right? Those companies are all based on continual buying, right? And so if their price is too high, they have to react pretty quick. Now, they didn't this whole time, this whole greedflation period, which I would say is probably the better part of 2 years. They didn't have to, because people were still willing to spend the money. They felt comfortable. They felt like they had a buffer. They felt like they had enough. And they were either comfortable or begrudgingly willing to. That has stopped. People have really cut back, it looks like, and they're seeing it in their own sales data. And as a result, they're cutting prices, and we're looking at the bargain fight now. And this is where Walmart's targets, their target was one that was called out specifically. Your Macy's, your whatever, are starting to figure out how to cut pricing as much as possible while maintaining margins as much as possible to hit an equilibrium where consumers will continue to consume. Will this hold up? No, there will be a bottom to it. Eventually, they will get pushed on by the inflation, the actual inflation, their cost inflation that has hit the broader market and logistics networks, and that will eat their margins to a very thin sliver, and then they will go to other tactics such as cuts. And when they start seeing that happen, you can expect unemployment to rise. That's just how the economic machines work, you know, the mechanisms of economics work. We may be a quarter or two away from that. It's hard to say. I don't know if it will be significant or minor. It really depends on how the spending and the excess cash goes. But the fact that retail discretionary spending is down really indicates that we are going to see a change in the economy, and it's already starting. The data is softening across the board. So one of those things we've been talking about for a long time. It's taken way long to actually happen, and it's starting to happen, and we'll see how it affects the rest of the markets as it goes. But when it comes to taking this back and looking at FAB as a result, if discretionary spending is down on staples like toilet paper, eggs, milk, then you can guarantee discretionary spending will be down on cardboard boxes, right? Because cardboard and cardboard boxes is not something that's a luxury good, right? It's not something that is a core spending need. And so if it's at the lower end, it's gonna start feeling pain. If it's at the medium end, it's gonna feel pain a little bit slower. But we're starting to see that. We're seeing this medium end of the market kind of go into low end stuff, try to find deals now, and as that picks up, both the support for these types of boxes and the higher end stuff is going to come down. You're going to start seeing price declines a lot in a lot of different ways, and essentially it will be hard to move products. So basically, I committed myself to this situation a couple weeks ago. I think I even said it on the either the podcast or this market update, that I went to try to sell some stuff. I couldn't. I got yelled at by LSS for putting the price too low. Again, it was an accident, and I don't blame them for maintaining MAP policy. It's obvious that they have a policy, and it's fine that they called me for it or pinged me for it. What that does mean, though, is that MAP policy will be a problem for declining price environment. Basically, that stuff isn't going to sell. And when I got the MAP ping, I was basically like, okay, well, I have to commit to just owning this stuff or sell it like real quick on eBay or something, right? Like at a loss. And reality is, it wasn't worth selling at a loss. I can sit on it. I'm not in a cash starved situation. I don't need the cash. I just wanted to actually make more room in my house. That was my main goal. I'm moving it because I bought too much stuff. So we're at a point where I'm willing to hold for as long as it takes. It's no big deal. I will be sad if, say, it ends up lasting. Say it's like a recession we hit and it's a 3-year thing. 2 year, 3 years, pretty average. And like Fab struggles to the point where it declines as a game. I don't think that's going to happen based on the growth that we're seeing in various places and what's happening. But if that were to happen, then I'd be stuck with the bags. But I'm not too worried about it. I've committed to this a long time ago that if this money is lost, I will not cry. It's not that big of a deal. As how you enter this market is by not putting yourself in a situation where the money lost is a big deal. I learned all that in crypto. Trading crypto is way more dangerous than cardboard. All right, so let's look at a few things before we jump into the charts. Yeah, I wanted to look at these sales. This was not one. Okay. WTR did not sell, but this is down to 2000. Here we go. Arcane. Yeah, so 517 was the... Can you see that? Yeah, 517 was the... Oh, you can't see the whole thing. All right, well, whatever. I'll just read it to you. It's 5,300, 5,299. They did sell here for this, and now we're at this 7,999 plus 19.99 in shipping. So this arc going up is because this 5,200, 5,300 sold during the sale. So that is interesting that we did see a sale. This is an actual market data point, which is interesting because most of the time, especially ARC first, we have not seen actual data points on TCG Player. In fact, I don't think I've ever, I could be wrong on this, but I don't think I've ever recorded a true data point because I don't think there's been a sale in ARC cases since I've been recording. Same thing with ARC Box, although clearly there was a sale before. This one sold for $1,999. It sold on the sale. Somebody really wanted to move that box, and they did. And then Arcane Unlimited, we had two sales on 517 at 381 and 372. So we do have an idea that the actual price parity point where supply, demand, and price all match and line up and get things to move with a 10% back from TCG Player at least is somewhere just under 400. So seeing this as a $400 box means you're not going to move it. It's going to be stuck there for a while. 350, I bet you could move it without the discount, right? You could probably get it going because 372 and 381 did sell on 517 with that 10% back. So just keep that in mind. That is kind of where the market is, equilibrium. The sellers are being stubborn with their pricing. Some of it's MAP, not for ARC. And the buyers are being stubborn with their deal hunting, which is probably smart on their part. They will win in the medium term, I imagine. That's my take. All right, let's jump into first ed charts. We said we were going to look at ARC and was it Uprising, I think? Let's take a look. Oh, no, it was Outsiders because it's right here. ARC. Okay, yeah, so here we go. Here's this dip and check mark, and we're seeing a rise back up. Considering that we've only recently seen it come down this far, it's pretty interesting how quick it came up. It does give us a really solid data point for actual market value and interest. It's definitely in this price range, and that does mean this premium should be tighter most of the time now that we have a better idea of what this actually means. How long that lasts, I don't know, because there's not that many ARC sealed boxes left. Let's just look it up, Rising, real quick. Yeah, no, this data wasn't the one. It was definitely Outsiders. All right, Outsiders. We saw this jump up. We're hoping this would stabilize up here and create a ladder. Take the steps up, right? Elevator down. Problem is we just lost the floor and we're all the way back to here. The bad part about this is usually with these rubber band things, like if it rose too fast, it drops. You want to take about the middle point, and unfortunately the middle point is like basically flat to where it was before and or below it. That's what you can expect it to balance out as. Basically, it reverts to the mean between the top and the bottom, and usually, not always, but it's a good basis to sit on and wait for. And yeah, if it reverts to the mean, then we're in trouble. Now, if it does what it did back here, right, because we had a fast climb, a drop, and then back up to the climb, then we might stabilize at this new price point here within a week or two, right? This 84 a box. So let's see where the data goes. Let's follow it. But this was a much steeper decline than this one back here. So I suspect we won't get back to the top, especially with the macro environment that we already discussed. That is it for me today. That's all I have. Let me know in the comments if you have any observations from the TCG player market time frame and things that happened there. I thought it was an interesting sale. Like I said, I did sell about a third of my sales, which it was a good weekend. It was the best sale I've done yet. A third of it was Flesh and Blood, most of that being expensive high-end singles, cold foils, rainbow foils from the first 3 sets and first edition stuff. And I think that's it. I'm trying to remember if there was any others, but I think that was the mainstay of what sold. I don't think it was playable like cards unless they were like extended arts. I think those were the only things that sold that were just generic playable cards. Most of it was collector style stuff. Cold foils, rainbow foils from first few sets, things like that, first edition stuff, right? And it was the higher end stuff, so it was a good sale. That's why it was so much in cash volume. So great sale. Shows that there is still collectors in the market picking things up at a discount when they get a chance, when they get money back. That's how it goes. So that is an interesting detail. It goes back to the Walmart/Target thing. If you provide a sale, you can drive volume, and now everyone's experimenting with providing sales and driving volume. This does end up becoming a good time just from a financial management, self-management sort of thing. These sorts of times become good times to start looking for those deals on those things you've wanted, that you remember what you wanted at the hype that you were like, no, I can't afford that. It's too expensive. This is a good time to start deal hunting and things like that, because there are going to be these softer markets and softer opportunities what will allow you to basically get deals that will be worthwhile. Now, just like Rudy always says, right, buy it and expect to get punched in the face, because the market's probably going to be on a downtrend for at least a little while. I'm thinking 2 to 3 years, kind of a soft market to a very weak market, depending on recession, job losses, all the stuff that happens as a result of where we are. I would say I expect that to be a problem, going into, let's see, maybe a year or two from now. And as a result, that means be ready to deploy capital. I've been moving stuff out of boxes and whatnot into cash. Cash is going to be useful as we get into these discount markets. And I'm going to start, picking up the things that I want as we hit these lows and bottoms. I think we'll get there. Now, the Flesh and Blood side of things, I don't think I'll be buying anything there. Maybe a few Marvels here and there. I'm moving my stuff into what I consider to be more stable stuff, smaller stuff, less than boxes. I'm tired of having my house filled with boxes. It's basically what it boils down to. So I'm trying to shrink everything down into slab singles and things like that. Things that hold value, don't take up too much room, and I can hope for higher prices sometime in the distant future. And I enjoy looking at in the meantime. So that's it for me. I hope you're out there cracking packs, playing games, and enjoying this hobby that we love. Until next time, have a good one.